Hello, in this lecture we will define managerial accounting. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of managerial accounting is area of accounting aimed mainly at serving the decision-making needs of internal users, also called management accounting. When we think of managerial accounting, we're often going to compare and contrast that to financial accounting. Financial accounting being the making of the financial statements. Financial accounting has to do with the gathering of the data that we will then use in order to make the financial statements. Managerial accounting does use that same data, but it has a different perspective in that financial accounting is geared towards the external user, whereas managerial accounting is geared towards the internal user. Again, you might say that the financial accounting data that we are inputting, the financial statements that we are creating, will be a foundational point to the managerial accountant, to the decision makers, to management within an organization. However, the main goal of the financial, or the perspective with which the financial statements are put together, especially for publicly traded companies, are geared towards the external users, because the external users are more dependent on the financial statements and have less intimate knowledge about the company. Therefore, they need some more structure involved in the process of making the financial statements. External users like investors and creditors, and the IRS and the customers. These people are dependent, and if we want to get those investments from the public into publicly traded companies in particular, then we need to make sure that the financial statements are created in such a way to make it as easy for the public to make relevant decisions, and therefore we need them to be standardized. We need a standard set of rules. The same is true, of course, for the IRS. When we go to the bank, the same is true if we want a loan. We're going to have to conform to what the bank wants, and that's generally going to be something governed by a policy, as well as customers. In terms of the internal users, we're really just geared by management's needs. We have less regulation because the internal users in managerial accounting are just geared towards making information relevant for their decision making. That information will often contain much of the same stuff as the financial statements being a major source of the managerial accounting decision-making process, but managerial accounting could then reformat that information in any way that they want, that they believe is useful to make decisions. And oftentimes that will be that they're going to break that information into smaller chunks, analyzing certain segments, certain sections, to try to apply out and see what is going on a more detailed level, whereas on the financial statements, we're looking more at the big pictures oftentimes. The financial accounting is going to be more regulated because of the idea that we are really looking out, especially in publicly traded companies, for the investors, the stockholders that are investing, our 401k plans and all that kind of stuff. We need to have reliable financial statements and regulated financial statements so we can make those types of decisions. And for managerial accounting, there's a lot less regulation because, of course, the people using the data that is being put together are the company putting together the data. So we don't really need to manage or regulate as much the managerial accounting side because that's really governed by management's needs in order to make decisions. Once those decisions are made, of course, then we need to track what actually happened in terms of performance of the overall performance using the financial statement, using financial accounting. So the regulations could include like generally accepted accounting principles. The SEC, where publicly traded companies are going to have audits that are required to make sure that they are in conformity with some type of standard, such as generally accepted accounting principles. Managerial accounting, we have no regulations like that. And you might think, well, how are we going to, study managerial accounting if there are no regulations, if there's no set thing that says law or regulation that says this is how you do this? And of course, before we had regulations on financial accounting, the regulations are geared towards best practices. That's what we're doing for managerial accounting. There are a lot of best practices that have been well studied. So that means that the companies that do well, theoretically, are implementing best practices that can then be applied to other companies and other areas. Therefore, managerial accounting is something that we can study and drill down on and work based on best practices.